Ladies and gentlemen, in the previous two examples, we've done the aspect of trust and business. There's one crucial aspect that we should also add here. If I might once again put it very simplistic to you, a bank will not render a service free of charge to you. So a bank will also on the trust cash book, or let's put it the trust bank account, recover bank charges. And you know that whenever you open a bank account, a bank will charge you bank charges and they will immediately subtract that money from your account. So that in a nutshell is what I'll be doing on this slide. So there's bank charges that the bank will take from that account, and I will explain it practically here that by way of a bank charge, there may be a deficit on your trust cash book. So as an attorney, you've actually got two options. You can ask the bank not to charge the bank charges to your trust cash book, but to your business cash book, or you can make sure that there's enough surplus money, if I might call it like that, for you to cover all the bank charges. Let's take the following example. You receive 10,000 Rand from A, you receive 6,000 Rand from B. You receive the bank statement indicating bank charges of that amount. Let's just stop at that stage and then we can carry on with interest. Because if there's money in a bank account, normally the bank will also pay you interest. But let's just first explain the aspect of the bank charges. So, you receive 10,000 cash from A to keep in trust. We will open a trust cash book and we will debit the trust cash book with 10,000 Rand, and we will open an account for a trust, and we will credit that with 10,000 Rand. If you want to number the entries, let's make it item 1. Here we will cross-reference a trust, and there we will write trust cash book. You also receive an amount from B, 6,000 Rand. We will write there B trust, 6,000 Rand, and we will open an account for B. We will open B trust account, 6,000 Rand. We will write there 2, and we will write there trust cash book. If we just pause on this one, if you look at your trust cash book situation, in total we've got 16,000 Rand there. What do we owe our trust creditors? 10,000 plus 6,000, 16,000 Rand. So the money available equals the amounts that you owe your trust creditors. You see that? So in other words, ladies and gentlemen, if A or B, or let's say A and B, ask you to pay back their money, and they can do that, then you can pay back their money and everything will balance off and there's no shortage. So that's the wonderful situation. If we move now to the aspect of the bank charges, if we say the bank charge you an amount of 500 Rand bank charges, what will we do when we receive that statement from the bank? We'll have to enter that entry into our accounting record. So what will we do? We will say item number 3, bank charges, 500 Rand, and we will open an account for, let's say, bank charges, and we will debit that with 500 Rand, and we will say the entry 3 trust cash book. Once again, ladies and gentlemen, let's just stop there. If A and B should ask you to repay their money, will you be in a position to repay all that money? No, you will not be in a position, because there's now 500 rand out of this trust cash book. So what's the amount available here? 15,500 rand. But you owe your trust creditors 16,000 rand. Do you see that? So there's a trust shortage now here. The trust money is not enough to cover all your trust creditors. And as an attorney, you can never ever run into a situation where there's a trust shortage. So ladies and gentlemen, this is a long story, so I will go back and change and explain. So what can you do to overcome a situation like this? It's those two things here. You can ask the bank not to take this bank charges to my trust cash book, but to pay that out of my business cash book. And I'm just going to draw an account here at the bottom, if they should take that bank charges to your business cash book and they credit that 500 rand in your business cash book, then your trust cash book will still have a situation like that. You've got 16,000 rand here, and there you owe 16,000 rand. Are you with me? So you can ask the bank, take that bank charges to my business cash book and don't record it in the trust cash book, and then there will not be a trust shortage created by bank charges. Or, the second one, make sure that there's enough surplus money to cover the bank charges. So, and I'll put this here in blue. So that's the first situation. The second one, say for instance, at the beginning of the month, I determine that my bank charges will possibly be roughly 500 rand. But to be conservative, I transfer money from my business cash book, to my trust cash book to cover that bank charges. Let's be conservative and say I transfer money of 600 rand to my trust cash book, there at the beginning of the month. 600 rand there. If I look at the situation now, there's my trust cash book. What's the amount that I've got in my trust cash book? I've got 16,100 rand now in my trust cash book. What do I owe my trust creditors? 16,000 rand. So I've even got more money in my trust cash book than the amounts that I owe my trust creditors. So, ladies and gentlemen, I've provided, if I put that in there, I've provided money to cover that bank charge there, so that I don't create a shortage and that I can still repay my trust creditors in full. A trust shortage also, ladies and gentlemen, is a situation where you can't repay your trust creditors in full. So even if there's a trust shortage of 500 rand, it's a trust shortage because I can't repay my trust creditors. So that's the scenario surrounding bank charges, that as an attorney, there's two options. Pay over money at the beginning of the month to cover the bank charges, and then the bank can charge the bank charges against your trust cash book. Or the second one. Let the bank charge the bank charges to your business cash book and not to your trust cash book, as in that scenario. I hope that you understand that. If we move on then, ladies and gentlemen, to the interest. On a trust account where there's money in, normally there will be interest also. So in this instance, the bank determined 900 Rand interest here. So the trust cash book can be debited with 900 Rand. And ladies and gentlemen, I'm coming to this one and I put it in inverted commas. I'll come back and explain why. Let's say interest. And we debit the interest with 900 Rand. So in other words, if we've got the scenario where we did not instruct the bank to take it to our business cash book, or we pay in that amount, so we don't have that situation. Let's delete that one and we just take that scenario as it is there. So in this scenario, there's 900 Rand interest and there's 500 Rand bank charges. So in other words, we've got 16,000 Rand in our trust cash book, and we owe our trust creditors let's just go back. We've got 16,000 Rand plus 400 Rand, the difference between those two. So we've got 16,400 Rand, but we just owe them 16,000 Rand. So we've got more money because the interest was higher. But ladies and gentlemen, now I'm going to change a thing here again. I've put interest here in inverted commas. Why? Because the point is that this is actually not correct to do it in that way. The concept is that 16,000 Rand is not money belonging to me, or let's say to the business. I think you all agree. So ladies and gentlemen, you remember in the law also we say if the tree does not belong to me, the fruit will also not belong to me. So that money that the creditors paid in here is not my money. So the interest can't go to an interest account, because that money, that 16,000 Rand on which that interest had been earned, is not my money. So ladies and gentlemen, what should actually happen here? Let's delete that bank charges and interest. The interest should go to an account that we call the Fidelity Fund. What is the Fidelity Fund? It is actually funds that you as attorneys build up within your profession, so that whenever there's problems, by example, an attorney stealing trust money, the Fidelity Fund will be an insurance policy that will repay that money. So in net, what should we do? That interest should actually be credited there on the account for the Fidelity Fund. Why? Because it's not your interest. And that bank charges should not go to a bank charge account, because bank charges by definition is actually an expense to you. So why should you not take it there? Otherwise you will have to see that as an expense for your account. So we will also take that bank charges to the Fidelity Fund. To put it in other words, your profession instructed you to open a trust cash book. So the bank charges that's been paid on the trust cash book, so actually go to the Fidelity Fund, and the interest should also go to the Fidelity Fund. So that at the end of the period, you will have to pay over 400 Rand to the Fidelity Fund so that they keep that amount there, so that if there's attorneys, let's be blunt and say, stealing trust money, that amount can be seen as a insurance against people that's acting in that way. So, ladies and gentlemen, just another thing. I'm not going to deal with Section 78 at this stage, because some of you may ask me, that interest, should that not go to the specific clients? We will come at a later stage in our main course to Section 78. And yes, then we may take, under certain circumstances, the interest to the individual or the individuals. But if you've got small amounts that will be paid out or paid back to the trust creditor over a fairly short period of time, then a client normally can't expect you to take that small amounts of interest to the client. So if you see the bigger picture, there's a lot of small amounts in your trust cash book, and that generates an amount of interest. Normally that interest will then accrue to the Fidelity Fund and not to the client. When it's a property transaction where there's millions or hundreds of thousands involved and the interest is a big amount, yes, surely the client will then get the part of the interest. But I'm just sticking here to where it's relative small amounts, and I'm not going to cover the aspect of the Section 78 where the interest accrued to the Fidelity Fund, but to the client. So, ladies and gentlemen, to just summarize here, as an attorney, there should always be enough money. In other words, enough money to pay all the trust creditors. The amount in your trust cash book should be exactly the same as the amounts that you owe your trust creditors, or it can be more. By way of bank charges, there may be a situation where the bank charges creates a trust shortage, and that may not happen. So what should you do as an attorney? You should make sure and instruct the bank, first of all, perhaps if you want to not take the bank charges directly to the trust cash book, but to the business cash book. Or you should make sure that you pay in enough money that you cover the bank charges in the trust cash book. And then, ladies and gentlemen, theoretically, listen, I say theoretically, the interest may be more than the bank charges, but you can't accept that that will always be the situation. So you can't just rely on the situation arguing that there will be more interest earned on the trust cash book than the bank charges. You may, for instance, have bank charges of 500 Rand, but the interest earned is only 300 Rand, and then still you've got a trust shortage here. So I hope that you understand this concept of bank charges and of interest, and that the bank charges and the interest should be charged against the Fidelity Fund. And if you owe the Fidelity Fund money, the Fidelity Fund should then be paid that money. And if you take all the thousands of attorneys in South Africa paying a few thousand Rand each month over to the Fidelity Fund, from that money they create this pool of money. And the most important aspect that they do with that money is to make sure that clients will not lose their confidence in your profession, and that they can recover the money out of the Fidelity Fund and repay people that perhaps suffer some problems where there's fraudulent or attorneys that had been stealing that money. Just by way of a closing comment also, that money in the Fidelity Fund is also used to sponsor the training sessions that you are doing as a attorney in training to qualify as an attorney, and from that they also sponsor the Journal Day Rebus and other publications.